Today we are talking about Clariant's 2025 performance. First of all, welcome to our chairman, Ben van Beurden is here. Good morning, Ben.
Good morning.
Welcome also to our CEO, Conrad Keijzer. Conrad, let me start right away with you, talking about 2025. It was another challenging year for the industry. How has Clariant been doing in this year?
Yeah, as you say, it was a challenging year for the industry. The recovery in durable goods spending by consumers has not happened yet. At the same time, we've seen the buildup of massive capacity in China. China has become the net exporter for a number of categories in chemical production. So in this environment, Clariant has been doing very well. So we finished the third year of record profitability, finished the year at an EBITDA margin of 17.8%, up in margins, up in absolutes. And a lot of that has been self-help. So revenue came in flat overall, but the improvement came from disciplined pricing management in an environment where raw materials slightly came down, as well as our performance improvement programs, where we delivered 50 million Swiss franc savings out of a total program of 80 million Swiss francs.
Let me pick up what you said in the beginning. So we see a shift of patterns, talking about China, for example. Now, Ben, you have a very long and broad experience in the industry, talking about cycles. Where does Clariant now stand with regard to this bigger cycle?
Well, I think as Conrad said, it's fair to say 2025 was another very difficult year. We've seen a lot of challenges, of course, first and foremost, the war in Europe and Ukraine. But also, I think more generally, regional fragmentation has not been very good for the industry. We see still a lot of unresolved trade tensions that are really, I think, impeding the industry. And then specifically focusing on Europe, what we're seeing here, of course, is much higher energy prices than, for instance, our competitors in the US are seeing, 3 to 5 times higher. So altogether, quite a difficult environment to operate in. Now, having said that, and you only have to look at the results, if you have a very well-considered strategy and you execute very well, you can deliver good results. We have excellent financial performance. We have seriously reduced our debts. And as a result of it, we have maintained a very strong investment-grade credit rating.
Yeah, thank you. So you mentioned strategy. So our strategy is a so-called purpose-led strategy, which means it's a holistic approach. We look also beyond financials. You both mentioned the financial track record. Now, looking at the non-financial performance, Conrad, what are your comments here?
Yeah, Kai, so you say we have a purpose-led strategy, a holistic approach, a leading ambition in terms of financial metrics, leading growth, leading profitability, but we also have an ambition for leading performance with our non-financial metrics. We're very pleased that we actually finished the year with top quartile employee engagement. That marks the 5th year of annual improvement in our employee engagement, a very important metric to us. For the first time, we now reached also top quartile customer satisfaction. Our CNPS rates went up from 45 to 50. So this is actually a major improvement as well, with a particularly strong rating on product quality, on service levels, and on OTIF. So this is very important to drive our organic growth. Then our environmental performance. So we have actually reduced our scope 1, 2, 3 emissions by 9% on an annual basis. We're now rated top 1% of companies in EcoVadis and the Carbon Disclosure Project. Finally, most important, our safety. So we now finished the year also top quartile with our injury rates compared to the ACC, the American Chemistry Council database. So this is a major achievement by all of our employees in the company.
Yeah, thank you. So maybe I pick up on the sustainability metrics you mentioned, because I think it's important to understand how is it related to innovation, for example, and maybe zooming out again, Ben. So how does that tie into broader trends that you see also in the context of a certain backlash that we see in the ESG field? So what is your assessment of the situation?
Well, Kai, my assessment is that the mega trends that we are often talking about, digitization, demographic trends that we are seeing, decarbonization, an increased focus on sustainability in general, these are mega trends that are there to stay. Despite a lot of concerns here and there about backlash, I do think these things are very well embedded. It's simply because people think these aspects matter, and they are increasingly prepared also to pay for this. And Conrad just mentioned the customer net promoter score. It shows that people who have a strategy that is focused on sustainability get rewarded by customers who want to see this. Few examples. If you look at Climate, the tool that we have to give our customers immediate transparency in the carbon footprint of the products they buy from us so that they can factor that into their decision making is a great example of what customers want. And the same thing is true for Clarity, the tool that we have for our Catalyst consumers. So 800 users on that platform using this. These things really show that customers reward us for having these tools available. And what's more, people are prepared to pay for it. That's what I said already early on. And if you look at the innovation scores in our innovation sales scores in our company, so the amount of products, the percentage of revenue that is based on innovative products, it has gone up. It has gone up from 16.9 last year or the year before to 18.8. So very significant improvement. People are prepared to pay for it, and these products are driving our profitability. And more anecdotally, we get rewards. We get rewarded by leading companies like Unilever, like Schneider Electric, like L'Oreal. They award us for excellence in the supply chain. So I think a great story for us.
So that means trends are driven by customer demand rather than politics only, we can say?
Always, always.
Always. Now, Ben, let's maybe stay with the environment because we now move into 2026. So we talked about 2025, quite challenging, as Conrad mentioned. What is your outlook on 2026 in a broader view, talking about the industry?
It's a bit mixed, Kai. So on the one hand, I don't think we can sit here and say, okay, 2026 is going to be miraculously better. I don't think we are going to see a massive upturn. What you also are seeing is that the chemical industry growth is somewhat decoupled from GDP growth. So even though we may be looking at sound GDP growth, I think you will still see a little bit of lagging in the chemical sector. Now, that doesn't mean that it's bad news, certainly not for companies like us, because there are quite a few also very hopeful signs. We see copper production going up, we see digitization being an ongoing trend, we see growth in consumer electronics, we see decarbonization, we see sustainable fuels still as a significant growth area. And these are all the areas in which we operate, in which we have outstanding products and services. So I think in that sort of environment, we can still capture a disproportionate amount of growth.
Yeah. Thank you, Ben. So Conrad, you heard it. Ben said the chemical industry growth is sort of decoupled from GDP growth, and Clariant is certainly not decoupled from the chemical industry. So how would you say that what Ben said would translate into our concrete outlook for 2026?
Now, as Ben said, we do not expect an overall pickup in our markets in the chemical industry in the year ahead. But as Ben also mentioned, we're very well positioned versus a number of these sustainability trends. Overall, what we expect is around flat top line growth. And we also expect further profitability improvements towards 18%, around 18% EBITDA margin for the year. And that's then very much driven again by performance improvement programs. We still have a part to deliver from our last year 80 million savings program. It's very much driven by that, as well as margin management and introducing products that add value, as Ben mentioned, for our customers. This is continuing to be very critical to us, to drive organic growth, to drive profitable organic growth. Then our midterm outlook, we remain committed to our midterm targets. That includes a further improvement, step up in profitability towards 2027. In a challenging environment, we do expect a bit of help from markets in 2027. Markets should recover somewhat by then. But we have proven to be successful in challenging markets. Ben mentioned the war in Ukraine. Ben mentioned the high energy prices in Europe. Tariffs in this environment in the recent 3 years, we have been able to achieve an annual year-on-year profitability improvement, and we're committed to continue that trajectory.
Yeah, Conrad, that was a good closing statement. Thank you both for your time and wishing you and all of us all the best.
Thank you very much.
Thank you, guys.
Thank you.